Welcome, everyone. I've got a real treat for us today. I'm going to be interviewing Justin Pritchard. And Justin is a certified financial planner. He's got expertise in retirement planning. I'll tell you more about him in a second, but first, let's say hello. Hi, Justin.
Hello, welcome, and thanks for having me here today.
Yeah, sure. I'm so glad you could join us. Let me tell you a little bit about Justin. He is a certified financial planner. And for those of you who aren't sure what that means, or you hear CFP, but that is certified financial planner. This is sort of the gold standard of financial planning. He took the exam back when it was on paper over 2 grueling days. That does sound grueling. And
Yes.
roughly 54% of test takers passed that year. Wow, that's really low.
They made it hard, but fortunately I made it on my first try.
Yeah, awesome. Awesome. All right. And Justin is also a retirement management advisor. So he has specialty in advising people on customized retirement income plan. And, I always talk about income is the thing. Even if we have a bunch of money, but we don't have any income, we need income because that's what pays the bills. So with interest rates low, that's been a challenge for everyone lately.
That's right. And if you run out of money, at least you have some income, hopefully from Social Security if you do a good job. So
Yeah, good point. What I really love about Justin is that he was the in-house financial advisor at community credit unions. But what he did is he was the 401k guy that helped employees use their workplace retirement plans. So that's why I contacted Justin. That and the fact that Justin is rare in that he will offer hourly consultations for people. So sometimes I work with a financial coaching client and they need just an hour or two help with planning these really important things like taxes and those complex topics. And a CFP like Justin is ideal for that kind of thing. So that's fantastic that you offer that service.
yes, pretty rare these days, although there are others. Yeah.
Yeah. You don't see it much.
No.
Okay, so I've got a few questions I've prepared here. I want to
Okay.
ask you. All right. So the first thing is, how can investors pay the lowest fees on their 401ks? Because I hear horror stories about the high fees on 401ks.
Yeah, that's right. And especially with a small employer, you might have pretty high fees, but employees do have some control over that. A couple of the things you can do is you can look for the index fund options within the 401k. So you might have a menu of, let's say, 20 or 30 options. Some of those might be index fund options, and they might be relatively inexpensive. Of course, you want your investment decisions to drive everything. So what's the right risk level and what's the right exposure to everything? But if you can find low-cost options, that's probably the best way to do it. You can also talk with your employer and just let them know that you're paying attention. So they might, not really know that these fees are important. They're busy with a lot of different things. So you could let them know, and you could even volunteer to be on a committee with the employer to help with the investment selection and running the 401k. And that way you can help guide maybe the plan towards using less expensive options. Those are a couple of ways to go about it.
Yeah, sure. And are the fees only at the fund level, or are they for operating the fund, like those management fees that come with funds, or are they also are other fees typically tacked on to a 401k?
Yeah, that's a great question. There are additional fees in a 401k that you don't have in an IRA, for example. So there are additional record keeping and administration fees. And typically the employer is going to have the participants or the employees pay those out of their accounts. And, sometimes it's a flat dollar thing. Sometimes it's a percentage of the assets. Now, some employers do just go ahead and pay those fees as a business expense. That's, rare and typically going to happen with smaller employers. But you're right. There are additional fees on top of the underlying funds that you invest in. One last thing I'd mention on that, I guess, is that if you are conservative or you have need for some conservative investments, a stable value fund is something that's pretty unique to 401k plans. So you could
Okay.
have your safe money in your job's stable value if
Mhm.
available. And that typically pays more than a bank account pays, and it would have lower fees. So again, if it makes sense, go ahead and do that.
Mhm. Okay. And then do employees ever move to a different place so that they can avoid those higher fees with their employer?
Right. Once you've left your job, of course, you can pull money out. And then some employers also allow an in-service distribution after age 59 and a half, for example. So you could potentially move assets to an IRA that you control. And then you can select the lower cost options. If you don't have any of those options available, maybe you could contribute up to what the match is, and then maybe do some additional contributions outside in an IRA, depending on how much you need to save each year.
Hmm. Hmm. Yeah, those matches are fantastic, aren't they? I mean,
Yeah.
my first job, it was 100%.
Oof,
And
wow.
yeah, I know, and that's rare now, right?
Yeah.
But yeah, what do you typically see with the matches now? I'm throwing a surprise question at you here. So, what do you typically see?
Yeah, that's fine. I mean, it is often going to be in the safe harbor match range. So that's the safe harbor is a way for employers to be able to save money and not fail these discrimination tests. So that's typically in the 3 to 4% range, sometimes up to 5 or 6. But they don't usually go a whole lot higher than that. Some employers
Mhm.
do. I see it occasionally, but usually, they're just matching because they kind of have to.
Sure. Yeah.
Yeah.
Yeah. Okay, great. That's good information. So, what about how much are your investors, your clients, typically paying in fees for their 401k for a stock, bond index portfolio? Or I guess we could just say all in so that someone knows, okay, this is sort of what's typical, what's average. I'm paying a lot or I'm not paying very much, because I find that clients that I work with, they're not sure if they're paying a lot for things or they're in a average or lower end of fees.
Yeah, that's a great question. And as you might imagine, it does depend on the employer and the size of the plan. So, how much money is in there? How many participants are there? I would say if we're going to start with a kind of ballpark number, 1% is probably in that ballpark, give or take 0.25%, let's say. So, if you are with a large employer, a university or a big corporation paying 1.25 or 1%, that would be on the higher end of things probably. If you're with a small employer, 5 or 6 people, a couple $100,000 in the plan, then it wouldn't be surprising if you're paying 1% or more. That said, I do work with some plans. I'm the advisor on a plan or two where they've really taken a lot of care to, again, pay those expenses and shop the plan and put in index funds. Those people can be all in at less than 0.25%. So anything is possible. It depends on the plan size and your employer.
Yeah, yeah. Wow, that's a big range because
Yeah.
we've got to make up in return, right? And that's not easy to do. Um, okay, good. What about what's the biggest financial mistake that you see retirees, people that have already retired? What is it that they do when it comes to their taxes that's the biggest mistake? And usually, I think we see these things over and over. What do you see often?
Yeah, it's a toughie because it depends on the person, but I think a lot of people don't appreciate RMDs or those required minimum distributions or fully grasp what's going on with those. So, they might not realize it can really bump you up into a higher tax bracket. It could cause, some or more of your Social Security to be taxable. It could cause you to pay more for Medicare premiums. So, there are a couple ways to deal with that, whether that's, doing a series of partial Roth conversions, or if you're going to just start spending out of those pre-tax accounts, if you're spending down the money, there are a number of ways to deal with that, but I think that catches people by surprise. And then, the other thing about that is they sometimes think they just have to spend the money. So they don't need it and they just think it goes in their bank or they spend it, but they can also reinvest it if they want. Sometimes that's just a perfectly good thing to do.
Yeah, yeah. I know there is that feeling with if I'm going to make this withdrawal, that I should go spend it. But I really I like reinvesting. So I think you reach a point where it's okay to go spend. But then if you haven't reached financial independence yet, or it doesn't seem like you have, then I think it's really nice to just keep investing that money, saving that money. So
a lot of people just don't need it.
Okay, what about do you suggest retirees roll over their 401ks into Roth IRAs always, or what's your take on that?
Yeah, it's a good question. You always want to look at, does it make sense to move that money from, I'm assuming we're talking about pre-tax money here, and then converting that over to Roth. You always want to look at that as an option. Again, that can help with those RMDs and many other things. What I typically, see or tell people to do is maybe move it over to an IRA first. You certainly can just move it directly from the 401k to a Roth IRA, skip the middle step. The reason I prefer, I guess, a teeny bit to put it into the traditional rollover IRA first is going to be that way you can select exactly how much you're going to convert each year, because whatever your 401k balance is might be the amount you want to convert, but it might be more than you want to convert. It might be bumping you up into higher tax brackets. So if we just move it into a rollover IRA, then you can pick the right dollar amount that fits with whatever your goals are. So that's usually what I see.
Yeah. And it just, everything you're saying just brings to mind planning around all this, right? Because the more you plan, there's just more in your pocket at the end of the day for which to live the rest of your life, really, at this point. Yeah. Yeah.
The 401k balance is kind of an arbitrary number. And so it's not a bad idea to do that necessarily. But if we can even enhance it by, turning some dials a teeny bit, then why not?
Yeah, sure. Okay, good. And then what about, I have a solo 401k because I'm self-employed. So do the same rules always apply to solo 401ks as to other types of 401ks?
I'm a big fan of solo 401ks, by the way. That's great to hear. Glad you have that. So a lot of the rules are the same. I mean, you've got the same limits. I'm trying to think of anything that's terribly different other than, the fact that it's a solo versus one that has a number of employees. One of the things that sticks out is it's a lot easier to do mega backdoor Roth contributions with a solo 401k. So that is where, again, you put in your salary deferral up to that max. Then you can put in additional after-tax contributions and then, basically more or less instantly convert that to Roth. That is a super powerful way to sock away money. So that's the main thing that's coming to mind on that. If there's anything particular you want to chat about, happy to talk about it. But they're kind of like 401k plans you have for yourself. Yeah.
And I researched it and set it up. I'm wondering, and I know the Roth IRA, the rollover, the backdoor almost went away, and then it didn't go away. Do you think it will be here with us for a while longer?
Oh, it's so tough to predict, but I think the thing to do is to go with what the current law is, and maybe look ahead and say this might go away someday, but let's keep doing it until we hear otherwise. Retroactive tax changes are painful but pretty rare, so anything's possible. But I'm just going to go with it until we find out we can't.
Yeah, absolutely. And that was a trick question as well. So I'm throwing in some trick questions here, guys.
Please do. Please do.
Okay. And then what about, is there anything that you'd like to share? This is sort of the end of what I had prepared. Is there anything that you feel like people should know, or your sort of special thing you'd love to tell everyone? Is there anything you'd like to say about that?
Yeah, I mean, well, you started out with sort of an interest in 401k. So, I mean, it's really a matter of putting money into some account somewhere. And so 401k is kind of one of the most powerful, especially for those self-employed people. I mean, that solo 401k is amazing, often better than a SEP. Well, for several reasons. We won't get into those, but it's easier to save more. It doesn't interfere with backdoor Roth contributions. You can just do a lot with it. It's easier to administer. So anyway, those are great. And otherwise, just keep saving money, do a decent job of investing. Don't overcomplicate it. Get some help if you want it. Obviously, I'm biased, but I know that a lot of people do a lot by themselves. And a lot of people come across me who are doing a perfectly good job all by themselves. So just do some research. Videos and channels like yours are a great resource. So keep learning. And that's about all I'd have to say, I think.
Yeah, and I want to backtrack a little bit and say I have a great CPA that I talk to about. I'm the sort of person, and I really recommend this for everyone. Just do some research, and then you can talk to someone like Justin, or then you can talk to your CPA, someone just to make sure. Because what I find, Justin, is that you think you have it figured out, and then my CPA will say, well, yeah, but, there's this, or, your income limit, you bump the income limit, or something happens, or this just changed. And so I do think it's really important for a lot of these issues to work with a professional, even if you do your own research and then sort of figure it out, and to have someone that really does this every single day to say, yes, that's right, to give it their blessing, I like to say.
Yeah, that makes a lot of sense. Yeah, tax rules especially get really complicated and they change, and it's, what used to be right isn't right anymore. So yeah.
That's right. Yeah. Okay. Well, great. Well, thank you so much for joining us today. Now, tell us, how can people reach you? Where online can they reach you, or how could they get in touch with you if they wanted to contact you for a session or to work with you ongoing?
Yeah, sure. Well, thank you also.
Sure.
A couple of places. I do have a YouTube channel here. That's Approach Financial. So please check that out. I talk about retirement planning stuff for the most part. A lot of overlap in our topics. So that's kind of cool. The audience might appreciate that. Other than that, my website is probably the best place to go. I've got it linked to from some videos, but it's ApproachFP, as in financialplanning.com. And then, a lot of articles and some downloads and various video/article topics that are all about retirement. So that's probably the next place to go if you wanted to learn more.
Okay, that sounds great. Well, Justin, thank you so much for doing this with me, and we'll see you on YouTube.
Yes, thank you. This was great. You have a great day.
You too. Take care. Hi, I just wanted to mention really quickly that Approach Financial ended up sponsoring this video for me, which was very, very kind of Justin to help cover my production costs. So I wanted to let you know that.